Historically, currencies come and go all because of the failure of the governments who control them. Through their arrogance, they propose that they can prevent a deflation simply by engaging in a hyperinflation. Today we will discuss how Venezuela's currency is so worthless, it's being used as a napkin. You came here for the truth, so let me unveil that for you. We're going to get into this today, talking about Venezuela, talking about currencies, their devaluation, and connect that in with the stock markets and how they're not doing so well right now. Let's begin with Venezuela here. This is out of the AFP. Venezuelans have been enduring shortages of the most basic goods, such as toilet paper, for more than a year. I've been covering the news in Venezuela now for quite some time, showing you how bad things can get very quickly. Their inflation rates are extremely high, and that is affecting people with their most basic goods. And look at this, an industry has actually emerged with people who will wait in line for you at a price. Now think about that, where you have lineups so long for these basic goods like toilet paper that people who are desperate for some cash are simply waiting in these lines, making a few dollars. That's the way that this works here, is that the government controls everything that these people have, that they can have. Look at this. Valencia is another one of these areas. They have big factories that produce food and other essentials. Still, the list of goods that are in short supply is long. Includes coffee, cooking oil, cornmeal, soap, detergent, you name it. These people can have their basic things all because of the failure of their government. They're trying to basically constrict along the people's necks in order to squeeze more out to make sure we can ration it all for everyone. Meanwhile, there are many, many bigger problems that are going on today. Out of the Business Insider, Venezuela's currency is now so worthless that people are using it as napkins. That's right. They're saying this right here. You can see the image on the right. An image is going around that sums up just how ridiculous Venezuela's economy has become. And what they're saying is that the man was using the $2 or 2 Bolivar note to hold an empanada. And what we have here is actually quite silly, but this is the way it goes. This is exactly what happened in Zimbabwe and any other place where they engage in a hyperinflation, where the dollars or the currency becomes so worthless, they begin using it for other purposes. According to Venezuela's official Bolivar dollar exchange rate, the man using his money as a napkin is wasting about 31 cents. But ultimately, we know where it's headed. In my book, I quoted the legendary Mark Faber in my chapter about paper assets, where he said, "Eventually, the interest payments on the debt will be so huge that they will have to just print money. Then they will repay in essentially worthless confetti." This is what's happening today as the debts of these nations are being piled up, whether it's through the nation itself, whether it's through their central bank. It doesn't matter. Debt is piling up all around the world. So what happens to the national debt that they owe? Well, you're going to pay back. You're going to pay back your foreign deficits that you have, but you're going to pay back in worthless confetti. The only trouble with that is it's not just one nation. Let's say the U.S. paying back China in confetti. Oh no, it works the whole world essentially, all engaging in the same policies. So they're all going to pay each other back in this worthless confetti, and this will undoubtedly bring chaos to the streets. Then we look at this out of the Wall Street Journal. As the U.S. economic expansion ages and the clouds gather overseas, policymakers worry about recession. Their concern isn't that a downturn is imminent, but whether they will have the firepower to fight back when one does arrive. Now, this is what I've been discussing. We're talking about a financial crisis. Every single time, though, I bring it up, there are always individuals who are not willing to believe it. This is the Wall Street Journal. Remember, this is not my opinion. I'm quoting here. In every case, I'm quoting. So right here, this is actually a really good paragraph. Money has been Washington's primary weapon in the decades since British economist John Maynard Keynes proposed aggressive government spending to battle the Great Depression. The U.S. generally injects cash into the economy through interest rate cuts, tax cuts, or ramped up federal spending. So they engage in this monetary or fiscal policy. They don't care. They just want to prop everything up. Keynes said the exact same thing. He said whenever you have a deflation, get the central bank to print the money and get it out there. By any means necessary, print money, get it out there. And they believe that this actually resulted in the recovery from the Great Depression. Nothing could be further from the truth. We know specifically that this actually slowed down the progress. How do I know that? All you need to do is read a book, read or two books. Even I have a chapter on this in my book about 1920. That's the actual reason how or the way that you can get out of a recession quicker. They called it the Depression of 1920, but basically it's a downturn. Now, when you have this, what happened in 1920 basically is that the government decides to cut the spending by, I believe it was 60%. Imagine government spending being cut by 60%. What a boost to the economy. And of course it was. And there was a recovery within a year and a half. Everything was back to normal. And then we had the Roaring 20s. These tools could be hard to employ when the next dip comes. Interest rates are at near zero. Fiscal stimulus plans could be hampered by high levels of government debt and the prospect of growing budget deficits to cover entitlement spending on retired baby boomers. That's exactly what I was just talking about a few minutes ago. Basically, you have governments that are heavily in debt. If they raise the interest rates, what are they going to do? How are they going to pay that back? Well, they could simply print up more money, but what are you going to do about that when the balance sheet of the Federal Reserve piles up and piles up? What about the entitlements that they call them, the Social Security, the Medicare? How are you ever going to pay all of this back when every single year becomes more costly to do so? Let's move on right here to China. Obviously, big news as of late. I've been covering it consistently. Fresh anxieties about China's commitment to steadying the stock market sparked heavy losses in Shanghai Tuesday, despite signals of a housing recovery and the central bank's latest steps to keep cash from fleeing. They'll use any excuse. We know specifically that, one day everything's just fine and the next day everything's bad. Meanwhile, none of the fundamentals have changed. This is how it works. Losses among stocks of state-owned enterprises in Shanghai started building earlier in the morning amid skepticism about Beijing's commitment to reform. It doesn't matter. It's all a perception right here that we have. If the perception is that they're not going to print money, that they're not going to lower interest rates, that they're not going to go and overreact to this situation that's occurring, well then the stock market's going to go down. But if they promise that they'll print so many trillions of dollars, well then market's going to go up. As long as something is there to fill the void, then the market will go up. Whether that's real money or printed money, doesn't matter. Look at this right here out of the USA Today. Stocks were lower Tuesday as investors react to earnings miss from retail giant Walmart and another bout of turbulence in China's equity market. Now, more of the same. What we have here is the decline in the economy. I've covered it before. I'm going to move on just to show you this. Stocks have been unable recently to string together enough sessions to steady gains to break out on the upside. Right now, they're trapped in this sideways trading pattern. Why? What's happening? Well, people are worried, investors are worried, the algorithms are basically waiting. They're waiting for some news. The news, however, is not positive. There's no positive news coming out at all. The jobs numbers we know are all fraudulent. Even when they come out, they're not really good either. And then you look at what's happening within China, and this all connects into the actual documentation, the statistics that we find, how many people are actually buying things, the imports, the exports, all of these different values, the Baltic Dry Index, all the different shipping rates we see are all turning negative now. And they're all multi-year lows in many cases. So you can't fight this at this point. I want to move on to the last article for the day. Something that one of the subscribers here liked to show me, and I brought it up here is very important. State senators passed legislation Wednesday intended to help California tackle climate change by setting new targets for generating renewable energy, reducing gasoline use, and increasing energy efficiency in buildings. Right away, if you're new to this type of information, you may think, well, that's a great idea. We want to lower the amount of pollution there is. And I agree with that. We definitely don't want the pollution to exist. We don't want all of this to be taking place. But unfortunately, this is the way that they built it. The renewable energy that we're looking for is simply too expensive at this point. It's not very efficient at this point either. So, we'll move on to the highlighted portion here. If passed by the Assembly and signed into law, the bill would require California to meet several objectives by 2030. Generating 50% of its electricity from renewable sources, doubling energy efficiency in older buildings, and cutting in half the amount of gasoline used on state roads. If the people are forced to use this type of energy in a relatively short time frame, all that's going to do is increase the amount that people pay. People are going to be paying heavily. Now, I'm sure that if they don't go in line with, for example, if they're not using an electric car and they're using a gas car, then they'll have to pay a tax. They'll figure out a way basically to make you pay for carbon emissions, make you pay for having to pollute, and all of this will go in line with the Rothschilds and their carbon trading platforms that they have. It's all a money-making scheme. It has nothing to do with helping the toxicity and that we feel in the air, which is a real problem. I definitely agree with that, but this is not the way to go about it, because all this is going to do is have the businesses basically ship overseas to a place like China where they don't have these type of regulations. It's going to push more jobs overseas. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. There's tons of charts, there's tons of diagrams in here that I know you'll enjoy. I show you that every time I do a video to give you an idea of what it's all like. If you want to flip through for yourself, if you go over to Amazon, they have a look inside feature. You can flip through the pages and see if you like it. Take care.